Good morning, Dingles Crypto. So I have an exciting video for you today. We can just jump right into it. I got my coffee, feeling good about myself. I hope you guys are feeling good about yourself too. Let's just jump right into it. Dingles Crypto. Follow me. I got 6 old followers. Good stuff. Um, TikTok, short little fun videos. Shoot me a follow. And then subscribe to my YouTube channel. We're at 64. We exploded yesterday, just like Elon Musk and Tesla. We're going through the roof. It's all because of you guys. I appreciate each and every one of that decides to subscribe. I'm going to keep out pumping out that content. I have been making incremental improvements, and hopefully eventually I make a very good product. I definitely can do better, but subscribe to stay updated and be a part of the ride, guys. I appreciate you. Let's jump right into the price action. So, I mean, it's not looking good, but it's also looking good. You know what I'm saying? I know that, but like, we're going to go down. But at the same time, when we meet the 20-week moving average, I'm going to show you in a second. If we keep moving up, guys, if we keep moving up, that 20-week moving average gets steeper and steeper and stays steep. So if we interact with that 20-week moving average when it's steep, highly unlikely to act as support. And throughout history, that 20-week moving average, if we break it, we're out of a bull market, right? So keep that in mind. I mean, it's bad to see it retrace, but understand that it might be good for the long run sustainability of the price, right? So keep that in mind. And Benjamin Cohen goes over this in this video if you want to go check it out. It's a very good video. I only listened to technical analysis from mid to long-term perspectives because short-term perspectives kind of feel scammy to me. I mean, I've watched short-term technical analysis and half the time they're wrong and half the time they're right, which would make sense, right? so yeah, check them out if you're not already. I'm sure a lot of you guys are already if you're following me because I've only had 62 and he's got 69,000. So, but anyways, Ethereum, I think Ethereum will follow in the footsteps until first quarter of 2021. I think we'll break correlation and start going up on that ETH Bitcoin pair, right? So that's exactly what you want to see. Why would you, like Benjamin Cohen says, why would you hold Ethereum if Bitcoin is going to have better returns? You're taking on more risk for lower returns. No, Ethereum will perform better in this bull market than Bitcoin. And if it doesn't, that would be surprising. All right, now on to some Ethereum news. Ethereum is now the most dominant settlement layer in crypto. So we are doing more settlement on the settlement layer. We're doing more transactions than Bitcoin. Very simple. There you go. There's some, I hate how we denominate everything in dollars. I mean, like DeFi Pulse, like value locked in DeFi is in dollars, which basically means if Ethereum goes up in price, so does the value locked, you know? So it's kind of just like, oh, the price went up, so now there's more value locked in DeFi, even though nobody else is adopting it, right? So it's kind of strange, even though obviously it's getting adoption. But anyways, Brian Brooks clarified what he was talking about in an official paper. But one thing that's funny to me, why the F are y'all pushing through legislation that clearly benefits Bitcoin and ETH while y'all still haven't provided clarity for XRP? Because, okay, so I know one of the reasons, and one of the reasons is Bitcoin and ETH are sufficiently decentralized and XRP is centralized, right? So XRP is under the same, like, it's the security while the other two are commodities, and securities are very, like, has more regulations for like more regulations to do anything just for adoption, and commodities don't. And because XRP is basically a company, and I mean, everybody's like, XRP CEO has partnered. XRP CEOs on CNN tonight or CNBC. Why are you calling him the CEO? Right there, it disclaims everything you say because no blockchain should have a CEO. Obviously, Ethereum has Vitalik, but Vitalik doesn't claim he's a CEO. He's one of the core devs, right? He's a developer that developed Ethereum and is very intelligent and not a CEO. Like, he's not a businessman. He's just a computer geek that's extremely intelligent, right? So, two very different things. And same with Polkadot. Polkadot, Gavin Wood, I believe his name, is a developer. He is one of the strongest developers out there. So, and you don't want to buy into a project with a good businessman because you don't need a good businessman in crypto. You need a developer, right? So keep that in mind. A little over a month has passed since Grayscale has announced the Ethereum Trust has hit 1 billion. So in a month, 0.6 billion has been added to the Ethereum Trust, whether that's in value locked, like I was saying earlier with DeFi Pulse, because the price of Ethereum went up. So maybe you could say if Ethereum went up in price by 50%, that's 1.5 billion now. So what does that mean? I don't know. Like, yeah, that's a nice statistic, but if you think about it, the price went up. So shouldn't the value lock, right? Assets in Grayscale. So yeah, this definitely looks like this includes price appreciation. So I mean, it looks good. But is it really that good? I don't know. I mean, it's better than going down, right? So, stablecoin issuer, Paxos Global, one of the biggest stablecoin, centralized though, has applied to become a federally regulated bank in the United States. So, BitPay, I just saw an article, but this page refreshed and I lost the article. BitPay is doing the same thing. So, think about this for a second. Every stablecoin in crypto is centralized. What is the one stablecoin that is not? DAI. There might be other ones, but that's the fundamental one that's being used all over DeFi. So does MakerDAO have cornered the market on decentralized stablecoins? Because there's a huge difference between decentralized stablecoin and a centralized stablecoin. First of all, centralized stablecoins will adjust to regulations, and decentralized stablecoins are just built as a smart contract, and unless the government rolls back Ethereum's blockchain, you can never get rid of that smart contract that's on the blockchain. So basically, DAI will never go away as long as that fundamental piece is there. So no matter what regulation comes out, this is what people don't understand. You cannot regulate Ethereum because it's just a blockchain unless you somehow crack down on all the nodes. Once a smart contract is deployed on Ethereum, it is impossible to get off unless Ethereum fails. And if Ethereum fails, I mean, that would be bad. I would be very sad. But something else will take its place and hopefully not centralized. And if it's centralized, man, that would be a sad day. Sad day. But anyways, let's move on. Power pool. I went cover this yesterday in my urine video, but it's still kind of worth noting again, right? So Power pool is creating the Yeti index, which includes Sushi, Cream, Acro, Cover, Keeper, CVP, Pickle, YFI, obviously Urine Finance, right? So as you can see, Urine's creating a pretty big DeFi ecosystem on one dashboard, which utilizes all these different protocols, which is exciting. But this is, once again, look around DeFi and find people cornering markets because it's all over Chainlink. Now I thought a MakerDAO might be, right? Urine Finance. Think of these people that are cornering markets. And I think what Urine needs next is options and derivatives. So they're going to be looking around for protocols that allow derivatives, right? Or are working on derivatives, and hopefully they will partner with somebody like that. Also, one thing, you can look for fundamental swings, so like swing trades. So big indexes will be a thing. I mean, Token Sets has already pretty big index with DeFi Pulse Index, I believe, and PyDAO have been working on it, and now PowerPool has been working on it for a while as well. So those are the three big players in index tokens. And these, I don't know who's going to win, but you can see that by market cap of the index. But when tokens get added to these indexes, I mean, that token will go up substantially, especially if it's a lower market cap. So say derivatives, Urine should be looking for a derivative protocol like Hedgic or OPYN. So OPYN currently does not have a token, but will eventually, and I covered that in one of my other videos, that potential airdrop like Uniswap on OPYN. I think that's a real potential. But anyways, if OPYN got added or Hedgic got added, and this was a $100 million index, that would be, and they get 5 to 10% allocation, that would be $5 to $10 million, right? Added to their market cap. So just keep that in mind when fundamental swing trades are very apparent in crypto, and if you get in the right circles, you can front end play that, right? So just keep that in mind. So moving on, Funship is a joke. He's like the troll of crypto. He does altcoin trades. He's a funny guy, but he just states a basic fact. I mean, okay, so crypto market cap. Let's get the exact number. 547 billion, right? And I mean, if everything goes correctly in DeFi or in crypto, we will be adding trillions of dollars in this next bull run over the course of the next year and a half, probably over 2 years. Trillions of dollars. So it's not impossible to become a millionaire, guys, and become a millionaire, reach financial freedom, and just identify trends and be early in the game. Like I said, find people that are cornering the DeFi market. DeFi is not going anywhere. So find the people like Urine, Chainlink, MakerDAO. There's several others. I mean, the only other one that has a derivative token is Hedgic. And although OPYN has been out longer, and if they introduced, I like OPYN better, although they have liquidity problems. But anyways, that's just be early to the game, know the trends, and don't get sucked into these shit tokens, just these zombie blockchains that have no utility. Don't be sucked into those, guys. Be smarter than that. Come on. But anyways, tonight in DeFi exploration, we're going to be exploring Melon, which is another exciting protocol. It's basically, and they just had a new a Melon V2 come out recently, which is exciting. So if you want to become a hedge fund manager, you can today with Melon. And you don't need like token sets you need to apply, like have an application. This, you just enter a smart contract, and there you go. So Melon is an Ethereum-based protocol for decentralized on-chain asset manager. It is a protocol for people or entities to manage their wealth and the wealth of others. Boom. If you want to become a hedge fund manager, you don't need any licenses. Just be a hedge fund manager in DeFi, and people will if you have good statistics and good return and a stable return, they will use you. This is capitalism at its finest, free markets. This is why I believe monopolies will show its face in crypto. So keep that in mind. I do appreciate you watching. That's all I have for you today. Stay tuned for DeFi exploration tonight. Leave a like, and I appreciate each and every one of you. Subscribe. Peace. And have a good day, too.